We've all heard, don't put no property in your name. Make sure it's in the business name. You don't want any assets in your name. However, is it really that simple just to buy rental properties in a business entity? In this video, we're gonna break it down. All throughout my 20s, and this is coming from somebody who bought their first property at 24. People always say, oh yeah, no, you wanna get a property in your business name, you don't want anything in your name. That's the way rich people do it. That's the way the successful people do it. They don't get anything in their name. They do it in their business. They do it in trust. Now, this is what I call general surface information. Is it right? Yeah. Is it wrong? It's not wrong, but there's a lot more to it when you're buying properties in your LLC or any business entity. For me getting this information, what did I do? I walk into a Bank of America, right? I walked into the Wells Fargo because in my mind, these people give mortgages, right? And it's advertised on the window that, hey, we'll give you a mortgage for your home. These are the rates. These are the promotions we're running, etc. So in my mind, I'm like, okay, well, they're probably going to be real excited from, seeing me, the investor, trying to get their money to buy a property and rent it out. Well, I go there. I said, hey, listen, I want to get a property, an investment property, and I want to put it in my business name. And they're looking at me like, we don't do that. Like, what do you mean? No, you got to get the property in your name. I know I want to in my business name because, guys, remember, my people watching me like, yo, everybody says, hey, don't get the property in your name, don't get the property in your name. And they like, well, nah, if you do it in your business name, we can't do the loan. They also telling me, oh, since this is an investment property, those promotional rates and everything at the door doesn't apply to you. That's only for primary homeowners. You're going to need a 20% down payment and you're looking at this particular rate. Wow. Okay. Thank you for your time. All right. What I learned eventually from being in the game, because people don't explain everything to you. You have to deal with local banks, but not only local banks, you have to deal with the secondary market. Okay. Now, can you buy properties in your LLC? Yes. And let's get into it. Now, the benefits of buying a property in your LLC. Of course, it's gonna be for tax purposes. Of course, it's gonna be for protection. What does that protection look like? In the event that you have a property, let's say an LLC, somebody falls down at that property and somebody sues the owner. Well, what happens is that LLC gets sued and not you personally, okay? And so it protects you. And so therefore you can handle the lawsuit or your insurance handle it, and then you can, move on with your life, but it doesn't affect you personally or your personal assets. What assets do you have personally? Your bank account, maybe your car, if it has equity, you're paid off, or your personal residence, all right? So the LLC is really beneficial to have. Now, I'm not gonna get into this because I'm not an attorney, but most people don't have protection in their LLC. And this was told to me from multiple attorneys and multiple accountants. The reason why is because you should not commingle. What does commingle funds mean? That means you should not be taking your business account and doing your personal grocery shopping, your business account and doing your personal kids' clothes shopping, etc. That is called commingling of funds. And if you ever were to go to court and your documents got subpoenaed and they see that, oh, this person went grocery shopping at Walmart at 10 at night, or this person went to the children's store and bought some clothes, how is that a business related expense? This person is commingling. So at that particular point, they can go after your business and your personal assets because you commingle funds. Okay, and you lose protection. All right, but that's a whole nother video, and you might want to consult with an attorney or an accountant about that to get your situation straight. All right, my accountant put me on game because they see my stuff and they told me, hey, Nasser, you need personal credit cards, that's for personal, and business credit card for business. Because at one point I was staying away from business credit cards until I got with a particular account, and she said, no, you got to separate this. This is a mess. And that's what I did. Your cons are having your properties in a LLC. You're going to get a higher interest rate. So if interest rates are at 7%, you're probably going to be looking at 8%. All right. It's normally a point higher. All right. Interest rates at 3%, you're probably going to be looking at a 4% interest rate. If you go to your local banks to get a loan, right, and your property in your LLC, you'll be on a 15 to 20 year amortization schedule. What does a 15 to 20 year or a 10 year amortization schedule mean? Meaning that your payments would be based off of you paying the property off in 10, 15, or 20 years. You know, some local banks may go up to 25, some. That's the highest I've heard, but your local banks typically won't do a 30-year loan. Now, if you go to your secondary market, your folks like ifundcities.com, when you go to these kind of lenders and get a loan, yes, they can do 30-year money. All right, that's not a problem. But with your local banks, they typically don't do 30-year money on these single family rental properties or this residential real estate, etc. So even on their commercial loans, they just typically don't do it. The secondary market does. Now, as far as your Bank of America, your Wells Fargo's, your big banks, they're not going to give you a loan in your LLC, right? They're just not going to do that, all right? Now, if you have a $8 million multifamily and it's in your entity, would they deal with you? Yes, at that point, because their ideal client is doing $5 million or more in real estate, right? They're not looking at little small house deals. They consider that risky, right? That's why you go to your local banks or your secondary market. Now, understanding your business entity, right? Now the LLC is going to separate you from your personal assets, okay? So your entity is one thing and you are separate. So in the event that anything happens, you know, and my fingers are in the air right now, anything happens, you should be protected if you did the right thing, right? So how do you start an LLC? This is what you can do. You can go to your state of secretary. So if I live in North Carolina Secretary of State, I can Google that and you should see on the homepage, start a business, start an LLC, you could do the form. In North Carolina, it's $125 to start and then $200 a year to maintain for an LLC. So please keep that in mind that once you get this LLC, yes, you have to pay every year and it has to stay active by paying your $200. Yes, I know it's a money grab, but in the event that you don't pay your $200 a year, they will basically cancel your LLC. And I think the proper word is dissolve it, right? Because you're not paid. So being that you're not active, if you try to buy another property in your LLC, or you try to register a car in your LLC, the attorney can say, oh no, this entity is not active, you can't use it. Or the DMV will definitely tell you, hey, listen, this LLC is not active in the state, so we can't register the car into this. So make sure you pay your $200 a year it takes to maintain your LLC. Now, all right, what do you want to do next? Next, you want to go to irs.gov, and then you can get a free EIN number, all right, to your business. They're going to ask you for the business information, in the state you registered the business from, and they're gonna give you a free EIN number. With this EIN number, it's basically a social security number, but for your business, okay? That's free. You don't have to pay for that, all right? Then once they give you that document, make sure you download it, put it in a safe place on your computer, and save it. Hell, if you can, put it on an external hard drive or the cloud. Now, you have that. What can you do next, right? Now you can open up a business bank account, all right? I'm going to encourage you to bank local because those are people who will probably do your loans for you on your real estate deals. So I'm going to tell you to bank local. What you can do now, whenever you talk to your lender, whether it be a hard money lender or a local bank, the local banks will not loan you money if you don't have 2 years tax returns. So you have to go out there and make money in your entity before you get an investment property in your entity, okay? So go out there, make money for 2 years, and then you can go to your local bank. If that's not you, you're gonna have to go to the secondary market. That's fine. That's how most of us start out. I still use the secondary market. Your secondary market, your hard money lenders, your private money sources, right? You're gonna make money, you're gonna do your taxes, right? My mentors, they advise me like, yo, make sure you pay your taxes because once you become profitable, you can walk into the bank and get a loan. So make sure you pay your taxes. So I'm gonna tell you the same thing they told me. Make sure you pay your taxes, all right? Because once you become profitable, you can walk into these local banks and get cheap money and not have to pay the guys on the secondary market. And cheap money saves you money, making you more money, all right? So you have the entity. Now the contract has to be in the LLC. Once the contract's in the LLC, you give it to, let's say, the hard money lender, and then they will do the deal in the entity, and that's normal for them. And they prefer, like hard money lenders, you have to have an entity. They don't want to do it in your name because they're charging you a higher interest rate. And in most states, right, you cannot charge a consumer a higher interest rate. So let's say interest rate's at 7%, you can't charge a consumer 15%, right? That's usually whatever goes against the guidelines, and the judge will side with the consumer, all right? Because the consumer should be protected from the evil investor. But when it's investor to investor, the government does not mind and let those guys just screw each other, all right? So you paying, 12%, 15%, 13%, whatever the rate is for some money for your loan that's in your entity, you don't want to focus on the rate, right? You want to focus on what is this doing for me? Am I getting this loan? I'm getting this loan. Yeah, it's going to be, I'm going to have this loan for 3 months, but at the end of 3 months, I'm paying this guy 15%, but I'm walking away with $35,000. Hey, this is a good deal for me. I'll do it. Don't focus on what you're paying him. Focus on what you're making, all right? That is how you would go about buying properties in your LLC. Local banks or the secondary market. If you don't have 2 years tax return, go straight to the secondary market, all right? Until you get, your weight up financially on paper and you're paying Uncle Sam, etc. Then you can walk into the local banks. Now, this is what you don't want to do. You don't want to say, hey, I already have these properties in my personal name. Let me put them in an LLC. What can happen and what's happening right now is the banks are calling a loan due. When you signed your mortgage paperwork in your name, you signed some documents that basically said you will not touch this deed, right? Or put it in any other entity. If you change the name of that deed, it looks like you sold the property, even though you didn't sell the property. So this is a true story, right? A guy had a Wells Fargo loan, all right? He put it in an LLC because everybody say, oh, you don't want nothing in your name, put it in your business name, etc. Well, when he put in his business name, he got a letter from Wells Fargo stating that he had 60 days to repay the loan. So he called them. Let's say he owed $180,000 in the property. They said, yo, you got 60 days to give us our money back. He said, no, I still own this, my entity. I can give you the docs. No. We made this loan to your personal name, so we want it in your personal name. So either you going to change it back or you going to pay us off. So of course he changed it back. Now, you can change the deed to a trust. That was by the St. Germain's Act in the 80s. They allow you to do that. You can change the deed to a trust for intent purposes. That is allowed. But putting it in the LLC, that bank can call that loan due. All right? So this process is how you buy properties in your LLC. It's simple, but it's not as easy as people make it to seem. All right? And yes, you do want to operate in your LLC for not only tax purposes, protection, and access to future capital. Also, what I want you to do, if you're interested in learning more about real estate and ready to get started, I'm doing a weekly class. Check out that pinned comment in the comment section. Join the weekly class, man. And yo, let's get to it. I'm Nasser, aka the Real Estate Guru. I'm not a guru, I'm a doer because I actually do this business. Peace.